Welcome back, everyone, to another edition of Anatomy of a Trade. And Roman and I today are going to go through a trade in a over-the-counter stock, PILBF Minerals, that was put into place by Dimitar, a student in the WTC2 spring semester. So, Roman, take it away.
All right, well, let's look at what is to the left of the trade. So we have an uptrend. We have the quite extensive climactic run rate here. So judging of what is happening here with the change of behavior, we are definitely retracing a lot of it, right? So we should be expecting here, some kind of weakness just from the judgment of the character of the change of behavior. It didn't go to the lower low because then we would be probably thinking like, okay, what's going to happen next? Would we be changing the bias and so on and so forth? But that's a big discussion for WTC2. Then the next rally is very important. What does it show us? It shows us that even without significant demand volume signature, we are able to retest the buy-in climax high. So, and that kind of negates the idea of the switch to the bearish bias. That's number one. And that still suggests, by the extension of the change of behavior, that we're in the weaker trading range. So maybe lower highs, maybe lower lows. So we have to be ready for that. Then I would just probably think about the comparison of the character of the three reactions that we have. And what could we observe? With each reaction, going into especially reaction number 3, we are seeing diminished distance. That's very, very important. We're also seeing diminished bearish character with the lower volatility, and that's usually bullish. So that creates a precondition for us for a change. If this is going to happen, how would the change happen? Well, we see somewhat of the limited marginal commitment in phase B below the support. We see a more extended commitment to the downside. Please also remember that this is a low liquidity stock. So therefore, any type of spring commitments here are going to be more visible. They're going to be more pronounced. So here you have 1, 2, 3 progressive closes to the downside in the sprint situation. So you need to be patient and you need to go through the testing process. And this right here, the return to the trading range, would be my preferable place for point of entry number 1. And that goes to my point of this has been a little bit late. So the efficiency is out of this trade on the point of entry right away. So Dimitar, right away, you kind of like putting yourself in a little bit of limiting shoes by entering at 1/2. So, some profits are being taken, risk is being increased, and so on and so forth. But there is definitely some reason to be excited here, and that is effort is increasing, that attracts some participation. And then what is the result of that? Nothing. We're flat, and that flatness suggests continuation. Franz?
One of the things that I notice here is after we come out of this phase C area, and I really think it was a great observation that this is a very thin stock, so it's going to accentuate just because there are fewer participants, whatever price movement we have. But I really like the catch on the volatility drying up, and also the length of travel of the last swing down. So some real clues there. And then when we look at the reversal and how this comes back up into the trading range, notice that where those 2 bars that actually overcome and give us our first extension that negates the entire everything basically from the breakdown to the left. So there's a nice clue there that especially we see a little bit of a reaction after that goes nowhere, a couple bars after those 2 up bars. Really nice place to be thinking about entry. And right after that, we see that we see a lot of volume coming in. There's obviously interest, and the directionality of the swing continues to be to the upside. So we've got our confirmation, and where the point of entry occurs could potentially be an add-on if you were already in on that first little area. So two great places to be getting on board. And then we see just a really, really strong, after that little reaction there that you just drew your circles around, we see a really strong move up and out of the trading range that looks climactic and tells us that this might be a place to be thinking about already lightening up, and instead of waiting for, and I understand this is excitement, this is some euphoria. We're seeing this trade work exactly as we expect it to, so we think, oh, it's got to continue, but the market's going to be the market, and we get that just a couple of bars that show some selling coming in, even though if you actually look at the volume, it's not hugely pronounced. But that's where the exit occurred, just sort of on the fact that, oh, maybe the bottom's falling out here and I better get out. So it's always more fun to sell on the way up, at least to trim on the way up, than it is to sell on the way down, Roman. So over to you.
Yeah, absolutely. I would agree with this comment. And we've talked about this in the classes, adapt the mentality of the composite or institutional participant and be in line with their footsteps. So again, just coming back really quickly to the points of entry, 1, 2, 3, 4, all of those are available points of entry, and they happen before the resistance, right? Exactly like by our rules, like, buy on the sign of strength, buy at the last point of support, but before the resistance. I really loved a comment by Franz about the nature or the character of this run above the resistance. So we are seeing expansion of the spread, gaps, extension above the resistance, and then slowing down of the momentum on the very local basis, shortening of the thrust. This is where you have to start thinking about Wyckoff structure. So all of that has been labeled, but then what about this rally? What is this rally? When you are participating in this rally since the lows in phase C of the spring, you should be thinking, I'm either in a sign of strength or an upthrust type of rally. Well, by the character, you start leaning more to the sign of strength. So you know that a proper sign of strength not only will extend, it will have progressive closes up, and at some point the construct of the sign of strength rally swing is going to show you that I'm done, I'm close to be done. So this is it. This is a message, I'm close to be done, and this loss of the momentum and shortening of the thrust is I am done. And then the confirmation of this I am done with the sign of strength rally is going to be your change of behavior that leads us to what? Leads us to the backup. So then you have to start thinking structurally, how does the backup develop? What if we have like, a complex structure? So you are going to have a change of behavior first, and then you're going to go into a trading range. So what is your most optimal exit? Here, here, and then here and here. It's in the upper part of this structure, right? Sign of strength. And then this whole thing is a backup trading range. So I understand the emotionality of it. And see, Dimitar, here's my point. You want to graduate to more advanced level, you have to understand the emotionality of your entry, because that creates an emotional inefficiency in your mind that you want the price to continue going up, and you are reacting into something that is, looks bearish, but still acts, somewhat bullish. It goes into the low of this combination, and then it stops, right? So it has a really good, pullback right away. So with that, I would just, as Franz suggested, start trimming here, start trimming on the lower end of the momentum, and start trimming on the reversal. If I'm in this situation, I'm probably wanting to wait and see if I'm going to have a secondary test rally. And on the secondary test rally around the area of where we started before, trim again, and then on the reversal, trim again. So your exits could be much higher, and your entries definitely could have been not only low, but also with additional add-ons. And that could have been a very, very efficient trade right here. So obviously nitpicking Dimitar here as usual in all of the classes, but that's how you guys want me to do this, and that's what I'm doing. Franz?
And Roman gives us the formula. He gives us the trading sort of ins and outs in WTC classes. So it's just, he's a great teacher. So let's take a quick look at the post analysis. And that's the reason we do these. We want to take a look at what our tendencies are and work to correct them. So 50% variance, timing, yes. Bias, yes. Character, I would disagree. I think the character is yes. Point of entry, it's okay, maybe 50-50.
Yep.
Stop loss, he did have a stop loss in place. No add-ons, definitely, no trims. And the exit, I would give you a 50-50 on that, Dimitar. So maybe because of the reasons that Roman has already, or even a no, because of the reasons that Roman's already discussed. So overall, better score than 50, better variance, and a little disagreement on some of your conclusions, but enjoyed looking at your trade. So thanks very much. And exactly. Always expect these thin stocks to give you, an exciting ride. So that's all for today in terms of anatomy of a trade. Until next time, Roman.
Thank you.